The second is pre-construction or entitlement. Third is construction. And the fourth, post-construction. For the purpose of the discussion of the four phases in the balance of this video, note that we will be using a commercial office building as our example. Let's take a look at the first phase of pursuit or site control. What we mean by this is, in order to develop a piece of real estate, you need to have the right to do so. So you will have to pursue and then control, as developers say, a piece of dirt. In the course of pursuing a site, you are going to want to figure out what you can afford to pay for the site. Generally, for a development site, this is done in two ways. The first is a residual valuation, and what we mean here is you will run a financial projection model, or Pro-Forma, by plugging in assumed costs and assumed revenues, and you will have an assumed target profit margin, and then you will back into the price of the land that you can afford to pay given those assumed costs, assumed revenues, and assumed profit margin that you have targeted. The second method of land valuation for a development site is based off of comparables, which are often referred to as comps. Comps are similar transactions that have occurred recently in your subject submarket area. So if you are looking at a downtown central business district office building site, you would talk to brokers and identify those other similar office development sites that have transacted recently and learn at what price those sites traded. And then, as a sanity check and to help you shore up your conviction, you will compare your residual land valuation and the comps and see if they gel with one another. If the most recent site